In this video, I'm going to break down the top 6 crypto ETFs in Canada, including a brief description of what they invest in, as well as the pros and cons of each. Now, while the US is still debating about whether or not to actually approve a spot Bitcoin ETF, Canada is way ahead of the curve, and you've been able to trade spot Bitcoin and Ether ETFs for several years now. But we've also seen a number of even more interesting crypto ETFs emerge in Canada, including some derivatives as well as some yield-bearing ETFs for the more degens among us. So let's take a look at what the best options are, starting with the basic spot ETFs and then working our way up to the more complex products that are out there. And my own personal favorite of all of these options, as you'll see in a minute, is number 4 of 6. Okay, for starters, let's talk about the spot Bitcoin ETFs, because this is the most basic vanilla option, even though we're still talking about cryptocurrency here. But these ETFs simply track the price of Bitcoin, the underlying asset, minus the fees that the ETF managers charge for running the product. Now, as you'll see in a second, a lot of the fees for these ETFs hover somewhere in the 1% range, plus or minus a couple of points. And this means that these spot Bitcoin ETFs will slightly underperform Bitcoin, the actual asset. However, you can more than offset this by investing in ETFs through a tax-advantaged account, like an RRSP or a TFSA. And that is something that you cannot do with Bitcoin or Ethereum itself. And so that is one of the major pros across the board for all of these ETFs, is that you may give up 1 or 1.5 points on the management fees, but you could potentially be saving 30, 40, who knows what percentage on the actual taxes that you could have to pay otherwise. Now, there's a number of options for spot Bitcoin ETFs in Canada, but in my opinion, these are the top 3, and I'm lumping these all together as one. We've got the Purpose Bitcoin ETF, which goes by the ticker symbol BTCC, and this is the largest one by far, with $2 billion in assets under management, and they currently hold over 35,000 Bitcoin on their books. Now, the management fee for this ETF is 1%, and they aim to keep the total management expense ratio below 1.5%. Next, we've got ticker symbol BTCX, which is the CI Galaxy Bitcoin ETF. It's a very similar product. It's a little bit smaller in terms of the assets under management, coming in at around 500 million, and it has a lower management fee as well as a lower total management expense ratio, coming in at 0.8%. So you do save a little bit of money on that. And the final one that I'm including here is the Evolve Bitcoin ETF, which goes by ticker symbol EBIT. The fee for this ETF is 0.75%, but it does have less assets under management. It's the smallest of the 3, coming in at just over $160 million. Now, there are definitely other options, but these 3 have the highest liquidity and the largest assets under management. So if you were going to choose a pure Bitcoin ETF, I think one of these 3 would be a good choice, and you have to choose what's more important to you, if it's liquidity and the amount of assets under management, or if it's simply getting the lowest possible fees. In terms of the pros of these Bitcoin ETFs, well, you get easy exposure to Bitcoin, and you can hold it in a tax-advantaged account, like I said, which also applies to every ETF that we're talking about today. So I won't bring that up from this point forward. The major cons for these ETFs is that there's slightly higher fees than you would pay if you were just holding your own Bitcoin yourself, and also they're not redeemable for Bitcoin, so you don't get to experience any of the utility of it. So you can't spend it, you can't send it, you can't receive it, and you can't use it to get yield. Spot Bitcoin ETFs are pretty basic though, so let's move to the next category, which is spot Ether or Ethereum ETFs. And just as with Bitcoin, there's a number of different options for ETFs in Canada that track the spot Ether price. And so they simply hold Ether, and Purpose is the largest one, again, with ticker symbol ETHH. They invest in Ether. They have approximately 300 million in assets under management, and they're holding over 100,000 Ether. And the fees for this are the exact same as they are for the Bitcoin ETF. Then we have the CI Galaxy Ethereum ETF. Assets under management for these guys is just over 400 million, and their fees are again lower, with the total management expense ratio coming in at actually just below 0.8%. And finally, we've got the Evolve Ether ETF, or ticker symbol ETHR, which again is the same product as the other one except for Ethereum. although this one has even less assets under management, coming in at just over $60 million. The pros for these ETFs are all of the same as the ones for the spot Bitcoin ETFs. However, you also get the added exposure of the second largest cryptocurrency by market cap. So you get to expand your horizons a little bit with these. The cons are also very similar, although given the fact that these ETFs are also non-redeemable is even worse because there's a lot more utility in the Ethereum ecosystem. So normally if you hold Ether tokens, you can do a lot of things with them. You can buy NFTs, you can use them for something called DeFi or decentralized finance, you can send them, you can spend them, and you don't get to experience any of that utility if you hold this ETF. It's simply a buy and hold play. All right, the next ETF that I want to talk about, coming in at number 3 on the list, is ticker symbol ETC. And this one is interesting because it combines the first two categories. This is a multi-cryptocurrency ETF, and it's actually the first one in Canada. So by investing in this, you actually get exposure to both Bitcoin and Ethereum in one single product. And the weighting is approximately 70% Bitcoin and approximately 30% Ethereum. Now, the management fee for this ETF is 0%. However, it's actually a derivative ETF because it holds both the Evolve Bitcoin and the Evolve Ethereum ETFs in it. And so you pay the fees on those, and it's more or less equivalent to what you would pay if you're holding any of those options. The major pro of this is that in one single investment product, you get exposure to multiple different cryptocurrencies, which is great. And the major con is that it does have less liquidity than any of the other options that I've mentioned so far. It only has $30 million in assets under management, and the order books for this ETF are way more shallow than for any of the other ones that I've discussed so far. All right, coming in at number 4, we are now getting into some of the more interesting investment products that go beyond just holding spot cryptocurrency, and they actually add things like yield. And in this case, I am talking about ticker symbol ETHQ, which is actually an Ether staking ETF, and it's the first one in Canada that not only holds ETH on its books, but also stakes the Ethereum tokens, and then you get to actually get the yield from ETH staking with this ETF product. And actually, according to 3iQ, this is the world's very first ETH staking ETF, which is super cool. And this one is actually my favorite one on the list, and I am planning on adding some to my portfolio. Now, if you don't know anything about Ethereum and how ETH staking works, I can't really get into it in this video. I have other videos on that, but essentially you take your Ether tokens, you use them to help validate the cryptocurrency network, and in exchange for that, you get a yield, which is currently approximately between 3 and 4% in ETH terms. However, in actual dollars, that could be way above 3 or 4% if the price of Ethereum goes up. Now, currently, there's 0% management fees to encourage people to buy into this ETF until March 31st, 2024. It looks like the actual management expense ratio is going to come in at around 1.6%. However, that is definitely going to be eclipsed by the actual yield you're getting from the ETH staking as well. So even though this does have a slightly higher expense ratio than the other options I've discussed so far, the fact that instead of just buying ETH and holding it, you're earning a yield on that, it's not sitting idle, and so that makes a huge difference and completely counteracts the negative impact of those expenses. All right, coming in at number 5 of 6, this is another interesting product that offers a yield to holders. In this one, there's an option for Bitcoin and for Ether. It's called the Purpose Bitcoin Yield ETF or the Purpose Ether Yield ETF. The ticker symbols are ETHY and BTCY. And so what this does is it buys and holds Bitcoin and Ether in the respective products, but instead of just buying and holding, it then sells covered call options on a portion of the portfolio. And so by selling those covered call options, it's earning an income which is paid out to the ETF holders in the form of a dividend. Now, currently the dividend yield for the Bitcoin version of this is just below 12%, and for the Ethereum version, it's just above 12%. There's a slightly higher management fee. However, obviously having that yield from the selling of the covered call options completely negates the management fee here as well. And so the main pro of both of these products is that you get a very high dividend yield and you get exposure to the underlying asset class. So if the price of Bitcoin or Ethereum goes up, you win. However, that leads to the main con of these investment products, which is that it is a higher risk strategy because if the price of Bitcoin or ETH goes up too quickly, it could actually cause the ETFs to have to sell the crypto within the portfolio at the option strike price and potentially book a loss. However, since the managers of these portfolios are supposed to be experts, you would hope that they're managing that risk and that the option premiums from selling those covered calls over time would be more than enough to cover the downside risk. That's the idea with these products anyways. And the final crypto ETF in Canada that I want to talk about today is actually a short Bitcoin ETF, which is by the Horizons company. It goes by ticker symbol BITI. And the basic premise of this is that you can get short side exposure to Bitcoin if you think the price of it is going to go down. The cons for this investment product, however, are that it's a very high risk strategy. It's also got very high fees. The total expense ratio is almost 2%. It's got a small market cap with just over 15 million in assets under management. And so investors should definitely only invest in this product if they are confident in what they're doing. Now, all of these ETFs that I've mentioned here today are tradable on Wealthsimple Trade, which is my go-to brokerage for investing in Canadian ETFs. And if you wanted to sign up with my referral link today, we'll both get a $50 bonus, which you could potentially use to put into one of these 6 options. So good luck. Hopefully you found this tutorial helpful, and I'll see you in the next video.